Hello, hello. Today is such honors. We invite Mary Kwang from Royal Title. She is the Vice President of the Sales. We're going to talk about what is important about title. I wanted to say is that we all know about car insurance, car under something protect. We all know about life insurance. Something happened to ourselves. What happened when we come out? But today we are only going to focus on house of the title insurance. So here is a specialty of the Mary.
Thank you so much, Joyce. It's an honor to be here. I love talking about my favorite subject, and it is title insurance. I like talking about it first and foremost because it's something that most consumers, even if they have sold many homes and bought many homes, they're not really sure what it is that title insurance does. First and foremost, we are an insurance company. What we are insuring for the new owner is that anything against the property or the person who used to own the house no longer is attached to the property that you bought. So our number one motive when we are insuring a transaction is when you close escrow, whether you bought it all cash or whether you got a loan, that every dollar you put into your property to buy is completely insured. Now I'm going to give you a couple of examples. In parts of the world where there are no title insurance policies, I could have bought a property from you, Joyce, and paid you $1 million cash. And then 2 months later, I can get a phone call or I can get a letter in the mail from a court, or somebody can knock on my door and say, hey, this was my house, why are you here? And they can show me evidence by providing deeds to me. Now, that doesn't happen here in the United States when you utilize title insurance. If something like that ever did happen, and it does from time to time, you are going to be covered for the purchase of that real estate.
So basically you're saying you cover by purchase of whatever the money you pay for this property.
That's correct.
Then you will get 100% of the money back.
That's correct. So we will make you, if you are the buyer, we will make you whole. So let's take it another step further. Let's say that in 2024, I bought a property for $1 million. And then in 2025, the property is $1.2 million. What would happen then? Well, title insurance, our job, our insurance policy's job is to make you whole. Whatever it costs to get the person who doesn't own it to go away is what we'll cover, so that we can make sure your ownership does not change and that it's protected.
Okay, so things you talk about, I just heard a couple of the important, which is I come or have this question all the time, is that it's a cash transaction need to buy the title insurance?
Yes, so that's such a great question, Joyce. So the way title insurance works, there's actually 2 different policies that you can buy. If you are all cash, you would only have one policy.
Okay.
Because the person that we have to protect is only the buyer.
Okay, buyer side.
But you would have a second policy if the buyer gets a loan.
Okay.
So if the buyer gets a loan, let's go back to our $1 million example. If the buyer gets an $800,000 loan with East West Bank, let's say, the buyer is still insured for $1 million, even though they only put $200,000 in.
Okay.
So their insurance is good for the entire house. But East West Bank wants a separate policy for the $800,000 that they lent you. So it is 2 different beneficiaries. If you're getting a loan,
because the buyer and also the lender.
The lender. They both want to have their money insured. Even if the buyer only put $200,000 down, our job when we're insuring the buyer is we make sure that that person does not have to leave the property.
Okay.
They don't lose the ownership. But the lender wants to know that they don't lose any of their money.
Yeah, because this is so critical, because actually lender is the own the most portion because they are the one come out from the pocket money of the money they lended to.
That's right.
So it brings me another question: was the lending amount affecting on the title insurance premium?
Yes, it does. Yes, it does. So title insurance premium is a little different than other costs. It's more kind of like life insurance, if you will. Okay. We don't have, it's not like, oh, it's $500 for every million. We have a lot of different factors, but the premium is always based on the purchase price.
Purchase price.
Yes, and that's the amount of coverage that the buyer receives.
Okay.
And then B, if there's a loan, it's based on the loan amount. So if East West Bank loans $800,000, they cannot get a policy for $2 million. They get a policy for $800,000.
Oh, for exactly the amount they lended. So it's like 200 to the buyers, 200,000 to the buyer's side, 800 to the lender's side.
Yes. The only kind of fluid part about that, so the lender will never get more than $800,000.
Okay.
But for the buyer, if many years were to have passed and there's appreciation, if it costs Lawyer's Title $2 million to make sure that the buyer's title is cleared, that's what it's going to cost us.
Okay.
So that's one of the key important things, and that's one of the reasons why I like my industry is when you buy it, your protection is also forever.
Sure, sure.
So you can be a homeowner for 30 years and somebody comes to your door and you find out 30 years later that you have a title defect.
Oh, wow.
You would go back to Lawyer's Title if that is who you got at the beginning.
Oh, so it's just like carried all the way.
That's right.
Stuff on the only one-time transaction.
It's a one-time transaction, one-time premium.
Okay. Okay. Is this something beside that you feel like as the buyer or the seller we have to especially pay attention to?
Yeah, that's a very good point. So we've kind of discussed how the buyer is protected. Now, I gave you kind of a big picture view that your ownership is protected. But the reason why we're able to give that protection, insurance companies never take huge risks, right?
Sure,
we study everything and make sure that we're not going to get ourselves into trouble. So the reason why we're able to give that kind of insurance to the buyer is because we find out everything we need to know about the seller. We make sure that the seller's taxes are paid, that the loan against the seller is paid, and if there's anything against the seller that could prohibit a clean title, we've discovered it and we clear it up before escrow closes.
Oh, you're like investigator.
Yes, yes. But you know what? The nice thing about it, even for the sellers, in countries where there are no title insurance companies,
a lot of countries
don't have it. That means the parties involved have to figure all this out. But if you have a title insurance company that is part of the real estate transaction, we're also letting the seller know, Mr. Seller, these are all the things we need to work on and correct in order for you to get your $1 million from the buyer. Right? So once he gets his money at the close of escrow, he can go to sleep at night and not worry, oh, did my loan get paid off or not? Did my taxes get paid off? Now I don't own the house, but what if it wasn't paid off? So all of those assurances are part of what we do on the back end to make sure that we're clearing and passing title to both the buyer and relieving the seller.
So it's so critical, like when you're doing the new transaction, because you have to not just only pay for it, you have to pay for the right you have, the ownership you have, and you don't have to worry about what happened to the seller in the past of history going to this new transaction of the new homeowner. And as a new homeowner, you will feel sleepless. I mean, sleep-free for the things you don't have to worry because everything is clear, everything is under the protection.
Yes, yes. And we don't see it a whole lot in parts of Orange County because many of our homes are newer. But if you're going to be buying, in certain areas where they have older homes, for example, example. Some of these homes have been in the family for 20, 30, 40 years. And through those years, there could have been divorces, there could have been marriages, there could have been debts, and all of those things create a little bit of uncertainty where somebody could say, wait a minute, I had rights to that house.
Sure.
So that's essentially for a one-time premium what title insurance is doing.
I understand. That's why it's so important. And then the so exists. If you wanted to have a loan, you need to have a title
That's
insurance.
right. So yes, that's actually a great point. Title insurance is not mandated by law. You can actually buy and sell a property in the state of California. If you and I decided to transact and I was going to buy your property, I could say, here, Joyce, I'm going to wire you $1 million. Give me the deed to your house. We could do that.
Sure.
But the moment you have any institution like a bank involved, they require it. They will not lend you money if you don't have title insurance. That's how important it is.
Totally makes sense at all.
Yeah.
It's such learning a lot of information today.
It is a lot. And you know, the other thing is when you think about a title insurance company in a real estate transaction, sometimes we're bigger of a corporation or entity than the lender. It is backed by billions of dollars because we're insuring all of your clients. Right? We're insuring all the people who buy homes, and the state of California requires that you have the money to write the check. So it's a lot of money.
Big bank.
yeah, it's like a big bank. It really is. I tell my lender friends that.
Merge big.
Yes, that is correct. That is correct. Yeah, title insurance is, in my opinion, one of the most underlooked at pieces of a real estate transaction. And it's quite often I get calls and I work with buyers or sellers that are foreigners. You know, they could be from Asia, they could be from Canada, they could be from the Middle East, and it's a new concept, and sometimes people get very, they're nervous because this is doing business in a new country.
Sure.
So I always let them know, your money is not moving around by just some person. Your money is being moved around by an insurance company. And that's how we're able to insure the property.
Dollar amount of that.
Yes.
Very good. I mean, this is so important. I mean, we have much more subjects we have to kind of consulting you, and hope next time we have a different subject.
I would love that.
Thank you so much
for
sharing the information.
Thank you.